With investors focused on making the most of the current state of the economy, Tesla's price increase came as a shock to many consumers and investors. This rise in prices comes with shocking relative increases, especially for fans of the model. Elon Musk took to Twitter, inadvertently warning Tesla fans of what's to come, given the difficulties the brand is facing with manufacturing supplies. So, what are the new prices? Are Tesla consumers eligible for subsidies? Keep watching to find out. Tesla recently made history as the first automaker to have a market capitalization of more than $1 trillion. This showed that the electric car revolution has arrived and electric cars are here to stay. However, while the automotive industry seems to be waking up to the fact that the switch to electric vehicles is inevitable, there appears to be a revolution in the battery sector happening as well. What's interesting is that battery material prices seem to be rising at the same rate as this sector is expanding. The cost of raw materials, such as lithium, has risen dramatically, causing electric vehicle battery prices to rise. Tesla and its outspoken CEO Elon Musk have yet to comment directly on the recent price hikes, though a variety of reasons are likely to play a role. Not long ago, Musk tweeted that Tesla and SpaceX were seeing significant inflationary pressures recently in raw materials and logistics. This is correct. Inflation in the United States rose by 7.9% this year due to rising costs of energy, food, and services. In contrast, raw materials used in building electric cars, such as steel, nickel, and palladium, are also rising significantly due to the Russian invasion of Ukraine. The forecast for electric vehicle batteries has always been that high-performance batteries will become cheaper over time, as economies of scale accompany a surging electric vehicle industry. This has often been the case in previous years, however, according to BNI CEO Simon Morris. Increases in raw material prices in China will push up battery prices instead. Tesla has raised the price of its cheapest Model Y car in China by $2,372 after multiple price increases in less than a week for more expensive models. According to data compiled by CNBC, a regular Model Y made in China now costs $49,932 compared to $47,559 since January. The price of the performance Model Y increased by 7.7%, while the price of the long-range model increased by 8%. With the recent rise, the price of the cheapest version rose by 5%. Experts seem to believe that this is only the beginning. According to Morse, if Korean and Japanese battery manufacturers, such as LG and Panasonic, follow the Chinese approach, the price of nickel-cobalt-manganese cathode batteries could rise further. Do you remember how much a Tesla Model 3 was supposed to cost? $35,000. So, when Tesla CEO Elon Musk revealed this number in 2016, it surprised a lot of people. While the company supposedly reached this number briefly, it was never widely available. According to an electrical report, the dream is now more distant than ever. That means that based on another recent price increase of $2,000, the cheapest electric car available from Tesla, the rear-drive Model 3, will set you back about $48,490, including Tesla's destination charge. That's a long way from $35,000. How did we get here then? First of all, there is demand. Tesla cars are very popular, and with gas costs rising, the company has seen a significant increase in orders. This is not unique to Tesla. When gas costs rise, consumers seem to become more interested in switching to electric, but the increased demand allows Tesla to charge more. These price hikes are occurring as global inflation rises and business activity in China is disrupted by new increases in coronavirus cases. Major cities such as Shenzhen and Shanghai have now implemented strict coronavirus regulations, halting production at some factories and putting further pressure on already stretched supply chains. For Tesla, China is a very important market. The country's share of Tesla's total revenue rose to 26% in 2021, up from 12% in 2019. So it's no surprise that its current releases are having ripple effects on the economy. Tesla has already boosted prices for its all-electric vehicle range. Prices rose 5 to 10%, with the company's top Model X Tri-Motor increasing by $12,500 from $126,490 to $138,990. Of course, significant price hikes occur across Tesla's line of vehicles, and while the base 3 model starting at over $50,000 is disappointing, those considering the model. Tesla's flagship SUV has weathered price hikes for a while, and a starting price raised by more than $10,000 must be a tough pill for potential customers to swallow. This is the company's second price increase in less than a week. On the other hand, these price increases are not only larger than before, but they also apply to every vehicle the company sells. We are still dealing with a global semiconductor shortage, as well as other global supply chain concerns. This raises Tesla's manufacturing cost, which is passed on to the customer. This is not the first time that Tesla has raised its prices, regardless of promises to eventually develop to lower prices. In 2016, Tesla announced that it would increase the price of its cars in the United Kingdom by 5% due to currency fluctuations caused by the country's vote to leave the European Union. The announcement of an imminent price increase appears to have convinced many UK drivers to order a Tesla before the price rises at the time, which makes us believe that the current conditions may actually lead to an increase in Tesla car sales. When the fallout from Britain's exit from the European Union first began to negatively impact the value of the pound in October, prices had already risen by 3% as a result. Tesla decided to postpone the price increase until January 15. Tesla announced that it has extended the order date by 2 weeks for customers who were unable to finalize their purchase by December 31 due to unusually high demand at the end of the year. Public backlash aside, it appears that higher prices will remove some of the incentives that made manufacturers offer cheaper retail prices. One unexpected effect of the price hikes for the base Model 3 and Model Y is that they are no longer eligible for California's Clean Vehicle Rebate Project. If you're not familiar with the California Clean Vehicle Rebate Project, it's a rebate program for clean vehicles that meet specific criteria. Basically, you'll receive a check for the rebate you qualified for a few months after purchasing a qualifying vehicle. Both the Model I and Model Y are eligible for the $2,000 rebates because their manufacturers suggested their retail prices were lower than the program's suggested retail prices, which are a maximum of $45,000 for cars and $60,000 for SUVs, trucks, and vans. The cap is based on the base price of the model, since the manufacturer's suggested retail price for the Tesla Model 3 is now over $45,000, and the Model Y has exceeded $60,000. They have violated the caps for sedans and SUVs, so their customers are no longer eligible for California Clean Vehicle Rebate Credit. However, customers who placed their orders before March 15 are still eligible for the $2,000 discount, according to a company spokesperson. Eligibility is determined by order date, not delivery date. According to research, qualifying for the California Clean Vehicle Rebate Credit is no easy task. The manufacturer's suggested retail price of a vehicle's base trim level, excluding destination charges, determines whether or not it qualifies for the California Clean Vehicle Rebate Credit, according to an article. The California Clean Vehicle Rebate Project official noted that Tesla consumers were calling in large numbers to inquire about modifications. Consumers are also not eligible for a $7,500 federal vehicle tax credit because the company has sold more than 200,000 vehicles. For context, it's worth noting that GM and Tesla are not currently eligible for the program. If the base trim level of the third model drops below $45,000, Tesla will once again be eligible for the California Clean Vehicle Rebate Project credit. It is not clear when this will happen because supply chain bottlenecks, especially semiconductors and processors, have been in high demand since the start of the COVID-19 pandemic in March 2020. It appears that prices will not fall anytime soon, and if the current situation of the economy deteriorates further, it will continue. Prices are rising. So, what's the takeaway for the consumer? Either get your Tesla as soon as possible, because prices are expected to rise, or look at some of the other electric cars on the market, which some experts recommend. However, older manufacturer vehicles have significantly reduced the range gap and offer similar levels of technology for less money. Investors seem to be taking this in good faith. However, the stock has been performing better for some time, and analysts say this can partly be attributed to people seeing this price rise as Tesla taking control of the economic situation. What do you think about the rise in Tesla car prices? Do you agree with the experts that there is more to come? Comment below.